Just half past the bottom of the hour of noon Eastern. You're watching Liquid Lunch on Newsmax TV. I'm John Tobacco. We are high atop the financial capital of the world in the Question Tequila Studios. And on Liquid Lunch, we bring you what's happening, what's cracking, what's popping in real time every day of the week. And today, joining us in the studios is Tom Coughlin. He's the CEO and president of BCB Bank. And Tom, I know you instructed the banks to watch Liquid Lunch,
right.
And I want to thank you for coming down and joining us on Liquid Lunch.
Thanks, John, for having us.
Tell us what's going on. You're a publicly traded company. The bank trades on the NASDAQ. We're not soliciting anyone to go out and buy shares based on these conversations, of course. We're talking about banking. We're talking about regulations. What's happening in the banking world right now?
So right now, banking is hot. Construction loans, booming. Can't get enough people coming into the bank saying we want to build. So that's good for banks, the loans. What's bad for banks right now is the economy is booming so much, they're moving their money out of deposits for the banks into Wall Street. So we have a liquidity issue in the banking industry.
And is it getting easier or harder under Trump to access capital? I know you need more balance sheet to make more loans. Is it getting easier or harder?
Under today's economics, it's a lot easier to get capital to build a bank to grow.
It is. And there's many areas where the regulation is really becoming stifling to growth. I know you guys are looking at kind of being a forerunner and getting into marijuana and CBD companies. What are the problems companies are facing in that area?
All right, just generally, banking is very highly regulated, and I just wanted to our regulator friends, they're our friends, not our enemies.
Right.
So what's happening is
they like you guys.
I'm going to meet the FDIC tomorrow. Sure.
Hi, buddy. Maybe you want to bring him one. Maybe you want to bring him one of these to keep him happy.
So of course, banking marijuana, the big thing is money laundering. The regulators don't want to make sure that there's no criminal element into what's going on in the banking marijuana. So we're very highly compliant regulatorily and doing a lot of analysis of these companies, basically analyzing each transaction that they do on a daily basis.
So the transaction costs, and we talked about that before, Frankie.
Yeah, no, that's for sure. My dad was in the medical marijuana business for years, and he would tell me daily about the frustrations that he'd endure about banks not wanting to take his business. So I'm looking forward to hearing your conversation with Richard Stratton coming up next. But in terms of banking in general and policy in general, one of the areas that's always fascinated me is areas where the far left and on the far right agree. And John mentioned trade earlier. That can certainly be one where Bernie Sanders sounds like Donald Trump. But one of the other areas was the bailout following the Great Recession. And I was amazed to hear people that are as far left-wing as you can be and people are as far right as you can be say, you know what? We should not, as the taxpayers, be bailing out these big banks that cause the economy to crater. BCB, your bank was not one that ended up with any of those billions of dollars from the federal treasury, was it?
That's correct. Most community banks, which we are, didn't need the bailout. I could remember back during the bailout, they said, you're a troubled bank if you're taking a bailout. 3 weeks later, 4 weeks later, regulators are saying, you have to take the bailout. But community banks really basically didn't need the bailout.
Banks like Goldman Sachs, Washington Mutual, Wells Fargo, they helped cause the financial crisis to begin with by being irresponsible in the loans they were giving out, by doing all sorts of other things. You guys, who were much more responsible in how you were handling transactions, you didn't get any of those billions of dollars that those big banksters did.
Right, because at the time of the bailout, liquidity was the issue. It was liquidity was out of the market. Community banks was filled with liquidity. The Wells Fargos, the Bank of Americas, the Merrill Lynches, They had a liquidity issue.
Right, because you guys at the community bank, you had that local money that was put away, that was their savings account, their Christmas accounts, and the big banks were taking those people and converting them into derivative products and getting blown up. So you were liquid as ever.
Right.
And what people don't realize is you became more subject to regulation because you weren't taking money.
Right.
That's how backwards the government is, right? That if you don't take money, then you're troubled because there's new rules now on liquidity. So they screwed you.
That's correct. So the local, regional, community banks didn't have a liquidity issue at that time.
Right.
But we suffered the wrath of the regulation from the big banks.
One of the things that I found so interesting in looking into BCB is you actually make your push towards depositors, towards encouraging folks to open savings accounts and actually save their money. Now, that goes in the opposite direction with the way a lot of these big banks have been going. In light of the Fed's zero interest rate policy, we've seen a situation where you're basically almost paying a bank to rent their vault. Where people used to be able to live on their interest, and now they can't really make much of any money on their interest, which is one of the reasons we see so much of that money.
Liquidity was out of the market. Community banks was filled with liquidity. The Wells Fargos, the Bank of Americas, the Merrill Lynches.
And the big banks were taking those people and converting them into derivative products and getting blown up. So you were liquid as ever.
Right.
And what people don't realize is you became more subject to regulation because you weren't taking money.
Right.
That's how backwards the government is, right? That if you don't take money, then you're troubled because there's new rules now on liquidity. So they screwed you.
That's correct. So the local, regional, community banks didn't have a liquidity issue at that time.
Right.
But we suffered the wrath of the regulation from the big banks.